Good day. Ira Epstein with your metal market wrap-up, and this wrap-up is for Thursday, and here we are at the 17th of March, 2022, just getting on to 5:30 in the evening. Now, it's been a crazy week. The bombings, the idea that the Fed, 7 rate hikes they're talking, inflation's supposed to be going crazy, and yet during that, the stock market putting on a rally. I know you don't believe me because tonight and the early trade we're down, but believe what I'm telling you. We had a marketplace that was definitely in a rally mode, may have run out of that finally. We're looking at energy markets, yes, 107. Remember, we were just down to 97 or so. So this has all come back on you. Bonds and notes getting a bit of a rally coming off lower Bollinger Bands. I mean, that I can easily explain. And in the metal markets, I'm still enamored with copper, all right? Copper is still my favorite of the whole group in that. Dollar down 65 points today. It's interesting what seems to be happening. The market has decided that all these rate hikes, the Fed cannot walk that tightrope and not avoid hurting the dollar. The dollar seems to be the only market that's getting that. And, you would say, well, what went on when the stock market rallied and so on? Turn on my financial update and I'll cover it there. When we look at the gold market, it seems that it's been about 2% down the whole week. It really hasn't gone anywhere. And I say that because if you take a look at a daily chart, you see how the market has just been playing around sideways through all this, really not going much of anywhere. We had a vertical price break that took the market from right here, the 2070s, all the way back down to the 1900 level, and since then we've come up $50. So we're not halfway on the rally point yet, and why is the market stopping here? Tell me. Come on. 18-day moving average of close. You come under it, that acts like a barrier. That's the neutral point on the chart. That doesn't mean it has to hang here very long, but you often get a pause at that number one way or the other. When you were under before, you came up and you fought your battle there before the market decided to take off to the upside. So this is a logical pause place in a market that is not trending. If you define a trend as having a pattern that makes sense, a higher high and a lower low is not a trending pattern. In terms of Bollinger Bands, they're far away. If you took off, it's all the way up at 2028, and if you came down cracking from here, $70 lower is the lower band. And momentum, you are in an oversold condition. Nothing to really do as I see it in that market. What worked nicely on this particular chart is that the rallies back to the 18-day average of closes in the gold-silver ratio keeps showing that that's the resistance, which means silver is stronger than gold. And you can see that. This market is staying over the 18-day average where the gold market's having that problem, but it too is not in an uptrend. The trend on the swing line is down. The bias in the market is up since you're over the 18-day average. And the reality is you're in a battle right here at the 18-day average, unlike the gold that is not oversold. In the copper market, you got up high enough today to take out that move. So what we did is this break, this washout break, ended itself. And now what we've got is a market that's in a churn. So you're going to probably do one of these type things. It seems to be wanting to avoid going back to an upper Bollinger Band or a lower band at this point in time. So I think it's just going to be a little bit of noise in the market. And in the platinum, if you don't listen to what I teach, shame on you. I had told you as the market got down to this number, this is where I think the pros were going to pull their money out of the table. The combination of a 100-day average and a lower Bollinger Band are important. Why? The 100-day average represents a heck of a lot of trading, the better part of a year, right? The second thing that happens in the market, hitting a Bollinger Band from the big up move to a down, often you just don't go flying through it typically. The word is typical. We're in a war, we've got inflation, not we are in the war, but the world's watching this war unfold, and that's going to be interesting. You do know tomorrow that President Xi and President Biden are having a meeting. Wouldn't you like to be a fly in that room listening to how the two are going to talk to each other? Biden's going to throw the gauntlet down and say, you cannot help Russia, and China's going to say, don't talk to me that way. You don't have to believe me, but that's what's going to be happening. We'll see how this market works out right here. And you can see how it's trying to get away from that at this point in time, which makes sense. But the trend is still down. It is very oversold. No, when the market is under the 18-day average, I'm not looking for buy signals. I'm looking for either to be short or short covering signals. In the palladium market, you have a contra-trend rally taking place right now. It's unfolding. Higher lows, higher highs in an extremely oversold market could culminate in a rally back towards the 18-day average of closes. I think on any breaks, you're going to see big-time support show up between 227 and a quarter all the way down to 221.28, but I don't think it's going down that far. We'll see if I'm right or wrong. In the dollar index, this is a failure. If you come back with me to yesterday, this is yesterday, Wednesday, you had the market get a reading under 80. Now, I used to teach that if it just got under 80, that's the sign. But I've seen too many times where the next day you get right back over it. So I took my teachings down to under a reading under 79. But this is still a warning. And it also means when the market reopens at the 5 o'clock time, which it did today, what do you want to do? You want to be out of that market. You never looked up. So it opened steady, a little bit lower. Time to come out because you're going back to that number. And if you get back to the 18-day average, it means you had to break through that low. Breaking through that low, actually I have this arrow in the wrong place. I knew one of them on my chart was wrong. I forgot which one. Lower highs, lower lows. So I've got it pointing up there. I knew I did something wrong. I went through the charts. I couldn't find where I did it, but I did all the financials and these at one time. It just got away from me. You put this all together, you try to come up with game plans, and what have I been saying for 3 weeks now? Almost 4. Since the Ukrainian situation began, the war, I said that this will become a day trader's delight, not a position trader's market. I don't think I've been wrong on that, even this much, not that teeny amount. If you get lucky, it's a run in the grains, for example, limit up or limit down. You get different markets that are doing all these different things. And as they're doing them, how do you catch it? That becomes the big problem. Number 2, the risk associated with it. Risk is out of control in these markets. I have been having risk meetings with our compliance department, our management at our company, because you get traders that they don't understand. These markets move, and they move lickety-split. I mean, $137 in oil 9 days ago, down to under 100 and back up another $10. These are moves that you do in years, not in 8-9 business days. Got what I'm saying? Pay attention to that. I cover all this with trade ideas, specific ones, unlike what I do here in generalities, on our website, where it's all located in the research area, www.iraepstein.com. I'm Ira. You have a good day. Talk to you later.